Sean, wake up, buddy.
All right. Welcome
hello.
back to the Daily Stack. Sean Ristau here. We have Annelise Osborne. I also have my colleague, Avi Mash, who is in the middle of a blizzard currently. So it's good to see that technology is still working. But welcome back, and great to see all of you.
Excited to be here.
You're dealing with the snow too up there. And
I am. I have a lot of snow outside. But, you know, it's not snowing inside, and here we go. It doesn't stop us working.
Yeah, the podcast.
Not in our worlds.
That's right. That's right. That's right. And that's good. I mean, because people need something to do on their day off, you know, well, impromptu day off that they didn't plan on having. But Annelise, this is obviously not your first time here on the show. You know, well, first time on the Daily Stack, but
True.
We had you actually on our previous podcast on Block Fuel back a little while ago, and definitely exciting to see you again. Tell us what's the latest. What have you been up to? And give us a little background for those who haven't heard about you prior.
Sure. I'm excited when you said you want to talk about my book, which is called From Hoodies to Suits, right? Innovating Digital Assets for Personal Finance. So happy to chat about that, which is really a tool for the suits to learn more about all the hoodies built and the hoodies to understand the suits a little bit better. I took a little time off in December. So I was at Cadena previously for the last year and a half. And now I'm working on advising companies. So it's actually been really fun. One, taking kind of December off and pausing a bit because I was traveling so much. But also working with founders now and building out product and projects. And even though the market is where it is today, it does not mean things are slowing down. Absolutely. So I feel like so much more is being done behind the scenes, and there's so much more of building going on from kind of the crypto DeFi TradFi side of how do we build and integrate these two markets much more while we're not being distracted. The markets are the markets, but I also feel like the equity markets and the crypto markets are tied, and there's a lot of uncertainty out there, but we are definitely moving towards building in the space.
Mm-hmm. And today I'm in the hoodie and Sean's in the kind of semi-suit, casual here. What's your background? So I know you came, I guess, more from the suit side. What's how did you tap into the mind of a hoodie, if you will?
Sure. So I did TradFi for a long time. I was always interested in kind of finance and the financial flows. I worked in structured finance and commercial mortgage-backed securities, which, to be honest, were innovative at the time in the sense that they decreased the cost of borrowing because they shifted the risk from banks' balance sheets to bond investors who could choose the risk they wanted to buy at. And so I got in this space. I was doing a lot of board work, and I was asked to join a regulatory task force for ICOs. And it was run by a young lawyer who wrote a paper that went viral. And in finance, you want nothing to go viral. But it also made me realize that the world is so global and it's so open to people looking for opportunities. And the idea of ICOs for me was really kind of people looking for venture investment opportunities that they weren't given for the initial tech boom. And so I felt like there was this whole world out there, and I dug into what blockchain was. And for me, it was like, well, this is perfect this is what's happening in finance. Obviously it makes total sense. It brings more transparency, speed, programmability, and it's just the next step. And so looking around, the people that were doing the financial startups were entrepreneurs and tech people that didn't understand finance. And so I found a partner that had a broker dealer, and we launched digital asset securities, which were security tokens back in 2017, 18 was really when we kind of dove into the space. And I think we were early, and it's so exciting to see where we are today. It just took a lot longer and is taking longer than one would expect, but we're dealing with more of a regulated market because we're dealing with finance and investments and money, as opposed to if we think about kind of the internet boom, which took a while in itself, but that was dealing kind of more with information, and it's getting kind of the old school people used to understanding like this is beneficial. And so So yeah, that kind of flew me into it. So I've been full time in the space since 2018 and initially really focused on upgrading finance. I'm still focused on upgrading finance. I'm really kind of like shifting a little bit of pulling together TradFi and DeFi because I do believe there's a lot of similarities. A lot of things are the same. We're just using different terminology. I mean, there's some glaring differences with KYC AML, but we're moving towards that and we're building that. Right. So I get very passionate and excited about it. So
I would
anything.
The one thing I would say, like you brought up a point on the KYC AML. I mean, honestly, I think you had the introduction of the Genius Act back last summer. Mm-hmm. I think that kind of really set the table for this industry to be more legitimized and taken more legitimately. And I think, you cover some of this like in your book of how you talk about, the bros really kind of culture mentality versus like the actual traditional finance guys. And one of the things that Annelise, you and I know very well is like, there's a lot of these institutions that they've wanted to get in, but can't because they just don't have the clarity that they need. What are you seeing in that regard right now? Like, you have the BlackRocks, you have the JPMorgans, Franklin Templeton, the guys at Figure, my old stomping grounds. They're doing a lot. I mean, but what are you seeing and hearing out in the market?
Sure. Institutions are run by risk and compliance. And to be honest, that's why I wrote the book, is so they would understand, those suits would understand these great benefits of blockchain technology and why we should be doing this. And if you look, just to kind of a technology plug, look at New York Stock Exchange, the floor 20 years ago, 15 years ago, 10 years ago, it was shoulder to shoulder. It was busy and bustling, and that's where you traded shares. And now if you look at it, the floor of the New York Stock Exchange is used for media and parties, right? Mm-hmm. Because no one trades there necessarily. So now there's multiples the volume that's being traded, but that is technology. And so the way I look at kind of blockchain and what we're doing, and even crypto, is really the increase in technology for the next step. So it's amazing to see institutions that are stepping up in the space. I think this is just the beginning as well. If you look at kind of BlackRock, which is the largest asset manager globally in the world, right? Yeah. Larry Fink says everything will be tokenized. Jenny Johnson says everything will be tokenized for Franklin Templeton. And so I think it's one, obviously understanding risk and compliance. Also, the public companies versus private companies. I think it's kind of easier for companies that are more private oriented and less focused on investors and earnings every quarter, because I do think that holds back innovation, because there's a cost, right? What happens if it doesn't work? Then I'm going to get hurt as kind of the CEO or as the MD or what have you, right? My bonus is going to be changed. So I do think there's a short-term mentality with the public trade companies, less so than I'm a family office and I would like to have generational wealth, with companies that can think that way or are thinking that way, which is a bit more beneficial with kind of institutional finance. But yeah, I think there's I think TradFi and DeFi are starting kind of that backbone of merging together. If you look at vaults, they're really kind of infrastructure and technology for money market funds, for example. Like, there's different terminology that the hoodies and the suits use, and I feel a lot of them are the same things, just not understanding the other one. And that's kind of how I look at the idea of like vaults are starting to really take off. But we've had different types and structures. This is just a technology infrastructure that's putting it into the space, that's making it more efficient and allowing things. If you look at look at NASDAQ doing tokenized stock. So I spoke to one of the NASDAQ gentlemen about this and thinking it was more of kind of a step into crypto. No, they were being asked by institutions. Again, this is from a conversation, not written down, but they're being asked by institutions to have faster settlement. And if they have only so much risk-based capital being tied up in big trades, if that trade takes 3 days to settle, that institution has to wait and can't trade in something else. And so this makes it faster. And so I love those use cases, which could be from kind of a payments, a trade, a settlement cases. Look at stablecoins. I think tokenized treasuries, I think, are super important. I was at ARCA and we did a tokenized treasury fund way back when, before Franklin Templeton had And so I really,
some of the early movers on that one.
Yeah. So I'm a huge believer in what's happening and kind of see why, like we're setting it up to why can't we earn yield instead of, and at the time it was 5%, instead of having money just sitting idle as cash, why can't we hold something that is a liquid tradable instrument that we can actually earn yield on that is backed by US Treasuries? So that's really kind of the idea behind all of these money market funds. But it also, I think there's different, collateral management things that can be beneficial as well that we're not quite fully there yet. But
yeah.
So we have that. We have stablecoins payments. I had to pay a bill to a company, and this was like a company to company payment in another currency. And I was thinking like, okay, wait a second, we're going to have to go through banks and currency trades and what have you. And they're like, no, just pay in stablecoin. It was instantaneous. I did it in a second. Right. And so there's the fees are lower, the time is immediate. And there's so many benefits that haven't fully been recognized with kind of the, with the TradFi world about how we can do this. And a lot of that comes to risk and compliance and education, I think.
Yeah.
And obviously you brought up regulation, like what's happened in DC. I was down in DC the week for the Genius Act being passed, working with, or educating, I guess, legislators on the benefits of blockchain and really setting up for the Clarity Act as well. So that hopefully will have some more clarity with that.
But since you touched on it, like, why don't you, that's a good one. It's anything except clear on that act. What's the latest you've heard on that?
I think different people have different ideas of what they want to see in it because different things matter to them, right? They all have their different wants. I think that there's concerns. Obviously, there's something going on between stablecoins and banks and what have you, and even kind of exchanges, and everyone's coming from a different angle. But I do think that every step in the process, you have the SEC, you have the IMF, you have FINRA, all these people. The Brookings Institute came out with something. Everyone is focused on, like, these large scale players are focused on, we understand this, we want to do this right. Regulation is tough because you're trying to regulate something that's innovating. And so you don't want to overregulate, and you want to lay the course and just kind of definitions and define by defining what means what and what you can and can't do. So I do hope that there's more clarity. I'm not sure how much DeFi is going to be included in that. Obviously there's the tokenization side, there's as well, which is kind of what the more institutions are looking at moving forward. So I don't know. I'm on a whole bunch of chats about, and I'm just trying to keep up with when something's going to be voted on and what's happening. And it kind of feels a little bit all over the place, but it is moving in the right direction, right? It is a conversation. And so, I'd love to have something done in the spring, which is one of the things I heard that it would be passed, but
that's the latest rumor.
What comes out of that? Let's say, it feels like the first go, Brian Armstrong seemed pretty upset. Yeah. It feels like the banks have the heavier or the bigger microphone, I'd say, with lobbyists and people, just Wall Street's been around for forever. And this is kind of the new kids on the block trying to take over in some way. And so do you think how much of this is a battle of like them delaying until they get everything straight on the Wall Street side of things versus, are they catching up? For example, Larry Fink was totally against crypto at first, right? And said it was a pet rock, was kind of like the famous quote.
Jamie Dimon.
That was Jamie Dimon. But both of them have switched their tune now, right? And so how far along do you think we are in this journey? I know we have to get the Clarity Act passed, but is there a world in which the Brian Armstrongs of the world, we win here, you think? Or is this, the banks are going to ultimately win this battle, do you think?
I think it's working together, and I do think everyone brings something to the table. I do think banks are going to figure out the benefits of stablecoin and blockchain, especially back office. They're also looking at ways to make money as opposed to save money, but I do think there's benefits there. I think the Clarity Act might not have everything that we all want in it, but I feel like it's a step in the process. Because 100%. When you're talking to Republicans, Democrats, House, Senate, everyone has something that they're own thinking about. Like we had a different discussion of education in each one of those. And so I feel that's going to be the same with the other players, like with banks and with Coinbase and what have you. So I don't really know where we're going to end out, and I try to stay out of politics. But the idea of, I think it's going to be a stepping stone. So I think it's the first, I mean, if we can get this done or something done, because the House and the Senate had two different bills as well. And so this is kind of like, how do we merge them together and each get what we want? So I don't know. Hopefully it's something, and hopefully it's a step allowing institutions to be more comfortable in working in the space.
Yeah. And I think, something that I'm seeing, and I'd love your take on it, but so the US itself, we have so many different ways to send money in this country. And, obviously each one has its pluses, its minuses, its costs, etc. But I think where the puck is going here is more, Bitcoin came out. It was like, oh, I can move money from here to South America or whatever. As a traditional layer one, like obviously it's not the most efficient time-wise and movement-wise. Now you have Bitcoin Lightning, which, is out. You see a lot of big platforms like Strike, a couple other ones out there that are doing this. Do you think, what are you hearing on that? Are you hearing people more interested in the stablecoin side, the Lightning side? What's the, what are you seeing?
Sure. I will admit I hear about stablecoin more. But if you think about Bitcoin, as a payment, you can pay in Bitcoin in some stores, right, whereas they don't all accept stablecoin. And so I feel like that has, that's still, there's more benefits to Bitcoin than just, I think it's more than just gold. But if you look at kind of stablecoin, I think that is becoming an easier source of payments. There was just, I think today, Standard Chartered came out with something to say that they think it's going to be $1 trillion in stablecoin by 2030. And so what's interesting is
the latest number.
They published something today. So Tether has 120. So I'm always wondering about how if high 90s percentages are backed by U.S. Treasuries, right? Yeah. So that makes this very beneficial generally to the U.S. economy. Because it increases demand for treasuries. Is that going to lead to inflation? So I was diving into that before. I don't think it's kind of as much of an issue now, but if you look at stablecoins, there were I just pulled this up. Visa has a dashboard. So $63 trillion in transactions in stablecoins in the past 12 months. That's big. So Visa only had done, and it's not like for like, I admit, but they had done 14 trillion kind of ending Q3 for the last 12 months. And so there's more volume in stablecoin. A lot of that is trading that you're not going to have in a Visa. So it's not as much payments, but still that's substantial. Mm-hmm. That is substantial at 300, we're $300 billion of AUM right now. I just think that's exciting. Mm-hmm. So I feel like that's what I hear more of. Also going over to like the use of, collateral you're asking what I hear about stablecoins. I think the prediction market thing is really interesting too, because it's not necessarily crypto. It's DeFi with the crypto market coming out with it, but the fact that it's becoming more commonplace, people understand it as well, right? People understand.
What's the generational?
They understand, like that's kind of, this is just exciting that they can bet on most anything. So I feel like that and the government and the acceptance of that coming through is like kind of an interesting thing of like crypto getting in there as well. Now I know the US doesn't have access to a lot of these products out there.
No, the prediction markets are open in the US now. It's Connecticut, I think, is
I know I'm in Connecticut, so I'm a bit limited in what I can do.
Well, New York can go to the poly market. They actually have a physical market that they created to kind of joke off Mom Donnie's having the bread lines. So there's actually and there's now massive lines. So it was good because they probably spent millions and millions of dollars on this, but the earned media that they got off of that, I think, was interesting. Yes. I did want to bring up something, kind of talking about this generational shift, because you saw with the election, for the first time, Bitcoiners and crypto had a voice at the table for the election with Donald Trump. They took that position. I think that helped, along with podcasts, to like actually win him into the election. By 2048, here's a number that I'm pulling out some numbers here. $124 trillion in wealth transfer from boomers to the younger generation by 2048. Millennials alone will inherit roughly 46 trillion of that. 65% of Gen Z plans to invest in crypto in 2025. 1 in 3 Americans age 25 move significant money from checking to investing. This is really interesting, this shift, right? And I think it's because you now have a phone in your pocket, you have the ability to trade, and it's kind of scary with like Robinhood. We joke about this, how your 401k is one click away from a parlay now in sports betting that you can do, right? And so we're seeing this shift now that younger folks are investing in, like you said, they can invest in, anything now at this point, right? How does this play out? And in your book that you wrote, I think was a year or two ago now. So like you're writing new chapters. What do those new chapters look like with all of this new information? You have different betting markets like we talked about, and you're seeing this shift where it's significant amount of money, $124 trillion by 2048. So how do you think this all plays out, and what's the next book look like essentially?
So I have a chat. So strangely, my book isn't as dated as I thought it would be, just because it really encompasses everything more or less except for prediction markets. But there's a chapter about the great wealth transfer and the next generation and how I see it playing out in finance. And so it's funny that you bring that up. I have 3 teenage boys. They all invest. I wasn't investing as a teenager. My parents didn't. I wasn't raised in a finance world. And so they hadn't really, they didn't even think about it. And so, and my 19-year-old invests all the time. So he actually works and then invests his money. And so that I feel like is different. And he's in crypto. He just bought gold. So it's just really interesting, but I do think it's a different world. On Robinhood, you can buy IPOs. People couldn't buy IPOs before. IPOs are really for the ultra high net worth that actually had these accounts at the large banks. And so that I think is interesting. You can buy shares in private companies. Like there was just something in Robinhood on SpaceX. And so I feel like there's a lot more, like private markets are opening up. And that would be great because there are more private markets today than there were before. And public markets, there's so many fewer. And so like the public stocks I forget the numbers, but it's in the book too. But if you look at how the stock market's decreased, but I do think it's definite shift. And the millennials and Gen Z are going to have all the money. They're going to have more than half of the money soon because the baby boomers are passing it down to them. Sadly, not to me, but to them. But it's, I think the world is advancing kind of from an investment perspective as well.
Is it from an investment perspective or is it from a speculation perspective?
Well, I thought about this too, right? When you're younger, do you have like the idea of all the investments in kind of like the green investments, right? And so, and a lot of younger people really want everything to be green, but are they investing in it? And is that kind of young and idealism? But I think this is different than the young idealism when we're talking about kind of crypto or speculation. And is that so bad, right? Yes, you shouldn't put your life savings all in one stock or in one crypto. But I think the idea of I would like to make money even if it's off speculation. I think it's just different. It's different to say, oh, wow, this is also look at jobs for kids today they're not going to have one job in one institution for their whole lives. There's so many with the creator economy and different ways to actually do things from home. It's not the same as it was. And that I also think is helping them think about how they can, different ways to make money.
Yeah. No, I think 100%. I mean, no matter what anybody wants to say, like you could call crypto a scam, you can call it whatever you want. At the end of the day, it is changing the way that we do business in capital markets. It is going to displace, you're going to displace a lot of the stuff that's been kind of the status quo in the market. I find it very intriguing and interesting that Visa and MasterCard are so focused on the stablecoin market. It kind of goes hand in hand because it's going right after their core business. So
adapt or die, though. They have to.
That's what I think. I think that you find ways to work together, right? We've made money in high interest rate environments and low interest rate environments. Like business doesn't stop. And so they have to, like, if you're thinking about like what should community banks and what should other players out there be thinking about, educate yourself and figure out how you can work with this and how it can benefit you.
100%.
Well, I think the biggest thing too is right. Like these younger folks are going to graduate college. They're going to now start to make some of the money, and their demands for like UX and like Robinhood. You know, I have friends that were with Charles Schwab forever, moved over because they had a savings account. They would match, you know, the IRA, I think 3%. And so now they're sitting with Robinhood, right? And I think Robinhood's pulling a lot of this young money and many other, you know, companies that have this like friendly UX and bigger picture too is like, hey, it's Saturday. I want to send money to my friend. I can't do that necessarily with a traditional bank. And so the demands of this younger generation, I think, are going to, you know, be knocking at the door of these JPMorgans and say, hey, you need to give me a tool to build, you know, that I'm used to and that I can play with, that you know, has a nice UX and very easy to use and has 24-hour trading and has, you know, so that I think is the biggest shift that no one's talking about enough, that, you know, the old guard's going to like fall over and topple if they don't pay attention to the younger generation.
And the younger generation has had a supercomputer in their hand since they were born, right? And so they're used to it, and they socialize online. They, you know, playing video games or watching TV or reading content. Like there's so much they do online. So that UI UX is super important of not just the younger generation to make it easier, but also kind of getting older people a little more comfortable. Like I spent the holidays making sure my mom had online accounts for all of her, you know, all of her accounts or could pay bills or things. It's just getting that, you know, getting used to that as well.
No, I mean, honestly, it's, you know, you being in this space, Annelise, and, you know, I've been in the space 25 years. And when I started on the floor of the exchange, it was when electronic trading was really starting to take off. And people looked at, like, all the old timers were like, oh, this is never going to, this isn't going anywhere. We're going to, it's F that, F this, because it was literally changing how they do their job. And now I think it's no longer a question of, is it going to take off? It's to what level. So I got to bring up the obligatory question, AI. What do you think? You know, you think we're in a bubble? You think we're onto something that's literally going to change where we go and how we handle even things like Bitcoin?
I think AI can add so much benefits with efficiency, access to information. We can do our jobs faster, right? So I don't, will it streamline jobs? Sure, but you can also hire more people to do things in less time, right? So I feel like it's going to benefit business in that sense. Absolutely, it's going to come in. One of my projects I'm working with is actually, you know, using AI, but it's using AI to help us be able to trade faster with better information. Right. So
is it big data or is it little? No, I'm just kidding. I had to say the catchy, you know.
But I mean, AI is coming. We all use it and it makes our lives better. Now I think there's different aspects to that. Like, do we still need to think? Absolutely. But I do, I think it's going to change jobs, right? There's still going to be, I don't think the machines are taking over, because that's just not how I would ever want to think. I have read a bunch on that too, but I think that there's great benefits to it. I think it's going to shift the way we think, but it's going to increase our efficiencies. Like, think about coding. You can code so much faster. Innovation, if you think about how innovation is going to happen, that kind of curve, it can happen so much faster because it's less time to code. AI can help us code, and then we can review it. I still think that you need to review it because it's never going to be 100%, right? And so to make sure that we have the strategy and it's doing what we want it to do. But, you know, I think it is a good thing. And I have invested in a lot of AI projects, yes. And, you know, their valuations aren't great right now, but I also am a long-term player. So, you know, none of this overnight success generally takes 7 years to achieve, right? All those companies that when we hear about them, it's not like they just started. And so I feel like I'm in it for the long haul.
I mean, I always
get back to place. I was going to ask something more recent in the news. And since you kind of, I think I pulled up, you had rated over $400 billion when you were at Moody's, talking about like the private credit market, Blue Owl. I don't know if you're tracking that, but do you feel like that's the canary in the coal mine? So for those that are unfamiliar, like Blue Owl, froze all the redemptions, right, for a moment. And Do you think that this is, again, like this canary in the coal mine in the private credit space, going along the lines of AI? That's why a lot of these software companies have taken a hit, right? And a lot of those software companies are being funded by private credit markets. So is this a blow up that, should be front and center? And a lot of people are probably unaware of this, but would love your take. Just like, is this going to be something that's going to have, massive fallouts? And are they just one company that had to do this, or do you think a lot of the private credits are in the same space?
I think there's a lot of uncertainty in markets right now. I do think that's the case. I think private credit will I think there's a market for private credit. I do. I think there needs to be the idea of credit behind it, right? I think there needs to be underwriting practices that make sense. Sometimes there's a lot of free flowing capital, which is what happened in the RMBS crash back in 2008, that there was so much free money out there. I don't think there's so much free money out there now like there was then. I think there's more checks and balances ideally in place. If you're running a company, that you need to have your kind of risk and underwriting refined to withstand that from a risk return perspective. I think that we're going to continue to see private credit market expand. So I don't know that this is a canary in the coal mine, but if you think about DeFi is private credit, right? 100%. Like you can lend all on this. And so I don't think that private credit is going to
private anymore either. Like I think the whole term needs to change on it. Like,
yeah. So I think
it's not public markets, right? So
no, it's just, it's markets that traditionally were never, like, they weren't allowed because it was that private club. Yeah. But now I think technology has kind of knocked that wall down and said, no, these aren't private anymore.
There's also more private companies now than there ever used to be before. If you look at the amount of money, I should have this number, but I don't remember what is most recent, is the amount of private companies now versus before, which would technically go into private credit, right? Because they're not using the public markets to access bonds or equity. And so I feel like that's why I feel like this isn't going to shift. Blue Owl is actually interesting because I'll full disclosure, I do own some shares in Blue Owl, but this is also because I was looking back, this was over a year ago when I was looking at what all politicians are investing in.
Yeah.
And Trump owns a big chunk of Blue Owl. And so I was thinking, okay, what is this? And it hasn't been great, obviously. But to me, I just figured I'm a long-term player and I'm very diverse. And so why not?
Yeah. Well, and that's the newest. We actually brought on the founder of the Pelosi Tracker.
Yeah. Did you? I love that.
Yeah, Autopilot? They created Autopilot.
Yeah.
Right? And you can literally track politicians.
Yeah, I love it.
How much airtime I give them. But you can track politicians and
I know
happen to be right when they write the bills, so it's pretty interesting. And this is kind of like they're the real Robinhood, if you will, from being able to like actually tap into what these guys are doing, because I think it should not be legal, right? To if you're going to be writing the bill, you shouldn't be able to also place bets on it, or it should be very visible, like Autopilot's helping to do, but that's even 14 days delayed, right?
It's not even 14. Sometimes it's 6 months because Pelosi's a bit, different, but Pelosi also sold a bunch before this recent crash.
Before a lot of bills.
I did not do because I am a long-term player.
Yeah.
But yeah, I think it's great that there's a little more understanding of that going on, and why not? Let's play in it too.
Yeah.
I think honestly, the technology has been a benefit for the younger generation and those that don't understand capital markets as much, but it has been an absolute pain in the ass for anybody that in like a political or some type of position of power, because it has allowed things to come out and be opened,
more transparent.
100%.
Yeah,
which is how it should be, right?
Depends who you're talking to.
For years, I always say like how hard it must be to be president right now versus like in the 60s. A lot of the same shit probably was going on, but you weren't able to. You could control the media a lot more. Now everyone on Twitter, and I actually made this call, and I had a friend talk about this, and I said, like, we're going to eventually live, and this was 10 years ago, but I said, we're going to live in this world where everyone's going to have their cell phone. Everyone's going to be an independent journalist. Like, look what just happened in Minnesota with this kid, Nick Shirley, opened Pandora's box and now exposing fraud everywhere. Right. And so now everyone with a cell phone can be, an independent journalist. And this news breaks oftentimes before the mainstream media can even get to it. And so a lot of these hedge funds, are tapped in to see sentiment and different things like that on Twitter now. And that's playing a much bigger role. I think retail is getting a lot more intelligent overall as well with some of these tools that you're talking about. Like I don't know how to read charts, but my Claude does. So I can go
say AI is doing that for you. AI is tracking all the sentiment, and it's really interesting to see.
Yeah, it's evening the intelligent gap, I think, for a lot of people where if you don't have a background in something, go and learn. Like there's no better way to learn. You can literally type in, explain this to me like I'm 5. That's too simple. You can be like, all right, explain like I'm 12. And you can start to teach yourself, in ways that was not possible before. And so I'm excited. I mean, for someone like me that doesn't know how to, chart nearly as close to half my friends, I now have a seat at the table and I can take a look at all this very quickly. So
Annelise, we got 2 minutes and we got to wrap up on this. What's your prediction for the markets? What do you see? Where do you see things going this year?
That's a very open question. With markets.
Today is not.
But I do think markets are. I think equity and crypto are tied, like depending on what we're talking about. So I think that there's a lot of uncertainties. I said I did read up a bit. I follow kind of predictions for Wall Street, right? And so I do think like I'm also a positive person, and so I need to stay with that optimistic approach. So I don't think it's going to be a banner year. I do think that Goldman's predicting 15% generally, like mid-teen, and for equity markets this year. I do hope that there's not as much volatility and we start to flatten out a bit come spring. I mean, it's been a crazy year kind of with tariffs and uncertainty and all that's going on. But yeah, I do think we'll grow. I think there's going to be this whole AI question. I don't really think it's based on fundamentals. Yes, valuations are high, but I think there's a lot of expectations for earnings growth, which we're seeing. I think it'll be interesting to see there are a lot of geopolitics that are going on. And so I feel that, I don't think that is going to crush the market. I do think it's going to have some volatility, but I also feel there's opportunity in volatility, right? So Bitcoin where it is today versus, where it had been, there's opportunity now to step in. Usually people buy when it's going up, right? And so that's what a lot of the institutions talk about. Bitcoin though, a lot of institutions are playing in that space. And so when the equity market fumbles or other investments, they're going to take their risks, they're going to rebalance their risks. So they're going to take it out of most likely the crypto aspect, which is an alternative asset. And so that is a big flow out, which then I think will go back in when the markets start to rise. So I don't think crypto is falling apart by any means. And I do think there's a lot of look at all the collateral on kind of Morpho and Aave and what have you that are institutional now. Right. And so you can use money market funds, you can use different with more collateralized stock. I think there's going to be much more of a crossover. So I do think, yes, it's been a little bit of a frustrating year so far, and there might be a little bit more pain, but I think all in all, we're growing.
100%.
Well, Annelise, such a pleasure to have you on. If you haven't gotten her book yet, please go out and get it.
Hoodies to Suits. It has a bit of a resurgence. So my publisher's been reaching out with a lot of new projects as well. So yeah, I'm happy. Reach out. I'm on Twitter, LinkedIn. Shoot me an email. Always happy to chat. I love conversing on this. This is super fun. Thank you guys so much for inviting me. I love to talk.
Absolutely.
About it. Play with ideas.
Love it. We will be back in about 5 minutes. We got another guest talking more about Bitcoin for corporations and the institutionalization of Bitcoin. So thanks so much for coming on.
Thanks, Annelise.
Bye.
welcome back to the Daily Stack. We are very excited about our next guest. Spent 30 years as an actuary and risk manager inside some of the largest financial institutions in the world, managing over $80 billion in guaranteed benefits, building hedging operations that kept insurance companies solvent. He's not a crypto bro. He's not a permeable influencer. He's the guy that institutions actually hire when they need someone to tell them the truth about risk. And he literally wrote the book called Bitcoin for Institutions. So Brian Hirschfield, welcome to the Daily Stack.
Thank you. Thank you for having me. Great to be here.
What's going on, Brian? Great to see you. It's been a while.
Yeah, you guys know each other, yeah?
Yeah, we've actually I'm trying to remember. We connected in the past on another project, and the Bitcoin industry is rather small. I mean, people think it's big, but it's really small in the grand sense. But yeah, no, definitely great to see you, Brian.
It's great to be here. I love you guys. You guys did a lot for me. We did that interview with me and Andre Dragos.
Yeah.
And that was great. I enjoyed doing it, and just, it led to me having a relationship with Andre, which is, wonderful. So thank you.
I'd say most people, from my generation, kind of stumbled into Bitcoin. Maybe they got rich off it early on, or they've never really necessarily managed institutional money. Obviously that's shifting quite a bit now. You wrote a whole book on this, with Bitcoin for institutions. That's all we kind of hear about, TradFi community, coming in. How does your background, do you think, make your perspective different from the majority of Bitcoiners? That would you say?
Yeah, it's a good question. So I'm a relative latecomer into Bitcoin. So I'd say relative to typically people who write a book or, are talking on a show like this, I came in the beginning of 2022. So, little over 4 years ago. And, I knew about Bitcoin. Obviously, I kind of knew what it was. You couldn't have gone through, say, COVID times and be on Twitter at all and not, hear about people buying the dip and all this, right? And so that was a thing. And I'd heard about it in my time. Like, we ran in my institution, we ran a very large, complicated model every night that, it modeled a complicated option structure for hundreds of thousands of people, and we ran it on a massive grid. And so when we started using GPUs in 2011, 2012, and so around that time, somebody once asked the question, how do we know you're not using that grid for Bitcoin? And I'm like, well, what the hell is that? That sounds crazy. But you hear about it, and then it's like, whatever, it's just this thing. And if you are institutional, you definitely are trained to be very, I don't know about suspicious, kind of just dismiss it for the most part. I mean, Bitcoin is just something you dismissed. I mean, it's not like it was bad or if it was even, substandard or anything. It just wasn't anything that warranted mental energy.
Yeah.
That makes sense. And, going from that to falling so deeply down the rabbit hole so fast, I found myself with a couple of years of window of still working in my institution where I was so orange pilled that, I really got out everything I wanted to get out and thought through the things I wanted to think through. But really, at some point, it's just like the BlackRock ETF got approved at some point on this road. And then all of these possibilities opened up. I mean, I know BlackRock approving the ETF was I think a lot of Bitcoiners viewed that as a sad day or something like that, or something it's worrisome but the reality is, I mean, at least for me, we have nice things. And I know I started with the book, I was reading into the history of the attempts to get this ETF off the ground. And it was so much and so aggressive and went nowhere. Yeah. It went nowhere until BlackRock showed up. And so we may not like BlackRock. We may not trust them. One of the reasons I wrote what I wrote was to try to have like a amoral perspective, not immoral, right? But just like a a perspective on how I view Larry Fink based on my time in pensions and my understanding of BlackRock and my understanding of Bitcoin and my understanding of why they might be here. So that I think like instead of viewing it as like, oh no, they're so going to come and fork the chain and destroy everything. It's like, well, they might do that, but I actually don't believe that's happening for a while. And I think that they are going to be decent actors until they get their mission accomplished. If that happens, I guess we gotta worry about it. But like, it's kind of funny because like, if you really are, if you've trained yourself to believe Bitcoin is money for enemies, and no one we can't control who comes in or who doesn't, then it's really not that useful to bellyache about Larry Fink or Michael Saylor. It's probably more useful to try to get inside their heads and understand what the hell they're doing here.
Mm-hmm. And what have you seen since you've written the book? I mean, now in the past 6 months or so, Vanguard, was totally against it. They were kind of the last kingdom to fall, and now they're into it. Bank of America is allowing Morgan Stanley, right? So like the age of institutions is here, right?
The great capitulation. It's funny. Yeah. Vanguard's in my town, and I run my local meetup, and I like dream about like just like a mailroom guy coming to my meetup and just relentlessly orange pilling everyone there. That's never happened. But it's been nice to see. I don't know that they're here, right? It's like some of the big ones are here, and maybe that's all that matters right now. When I wrote this book, there was no paper Bitcoin summer. There was really Bitcoin treasury companies, and DATs were not that was not a term, and that was not like a thing.
Yeah,
I started writing it in December of 24. Right. And so you had MicroStrategy had just sort of started to show us what they were planning to do. Right. Which is like issue debt, basically use their capital structure to buy more Bitcoin. Right. And to give people, I guess, who are like second class citizens in the world, meaning they can't just go buy Bitcoin. So give them access. Right. Give them some substandard access, but it's still pretty good for them. So like we just started to see what they were kind of like thinking and rolling out. And then, they revamped everything very fast. And if we look at the history of the credit rating, you kind of know why. Pretty impressive, I would say. But it's a different world. It's like, it really is a different world now from when I started writing the book. Like now these perpetual preferred complex exists. It's pretty solid. It's a pretty good way to get double-digit yield, in a fairly conservative manner, I would say. And that didn't exist, and that's not where I was coming from at all in the slightest. Like where I was coming from was that I really thought fairly lowly of the institutional world, BlackRock was an exception that was, I don't know, kind of beautiful exception in a certain way. Like how, like, I think we all scratch our heads. Like how is this happening? What is,
everybody wants BlackRock. Like you want BlackRock to want your product. You don't want if BlackRock even peeps about your product, you're like, oh shit. All right. That's cool. Like, so long as they're not like, that's a piece of garbage. Like,
yeah,
Larry Fink's talking Bitcoin. The largest asset manager in the world.
Not just about it, right? But as a safe haven asset. That's the key. And that was the thing that lit my brain up about what I think he was doing. Right. But like, just, before we get into BlackRock,
touting his own book, but
what's that?
I said he was also touting his own book, because every time you buy on that ETF, he's
naturally, yes.
Yeah.
But a man like that who spent the last 10 years building a reputation around thinking Bitcoin is an index of money laundering had to have gone through something fairly significant to be telling the world essentially, to eat crow like that and to tell the world, look, I actually have a solution for my institution, and it's Bitcoin, by the way. It has to be. And it's like, that's why, Fink and Saylor are two key figures in my book, because they're two people who basically, they went through this process where they had a problem and they mulled over this problem and they saw Bitcoin as the solution. And they probably were like, no freaking way. There's got to be some other way. There's got to be some other way. There's no way I'm going to go tell everybody that Bitcoin is the only solution to my issue. So I find it kind of remarkable to see these two guys. I mean, Saylor didn't really have a reputation, but still, you could tell the circles he runs in was probably not too jazzed about, him being so full-throated about it. And then Larry Fink, like, it's really insane. I mean, it really would be like Jamie Dimon or somebody like that. It would be, it would be like Vanguard or somebody like that, just doing a complete 180.
Yeah.
And, while these guys have capitulated a little bit, they're not saying the things Larry Fink is saying, which is like when he says, so when he says Bitcoin's a safe haven asset, when he leaks a report the week the ETF gets approved, he leaks a 9-month-old report that I'm guessing we've never really seen an asset allocation report be leaked by any of these companies before, but we saw this one that suggested an 85% allocation of Bitcoin. He's clearly trying to move something here for Bitcoin. And, so now the question really is, okay, you have Bitcoin treasury companies, and I think that's now what people view as institutional Bitcoin. And I think a lot of people get confused about my book because it's not about that at all. I was very low again, I was saying, I was very low. I was lowly thinking about institutions. I had a very negative view towards them, and that's probably informed by my experience of just watching.
I think that's in line, though. I think a lot of people have very low opinions about institutions because of all they see is the headline.
Well, also their ability to actually understand Bitcoin, hodl it. So like an individual can hodl Bitcoin, right? An individual can have a bunch of people telling them they're insane, and they can say, you know what, I don't care what you think about me. I'm still, I care about this and I'm doing it. You can't do anything about it, right? Now, you take an individual with a partner, like a spouse, that gets a lot more complicated. Just adding that one person, it gets insanely complicated, right? Now it's like,
Sure.
Okay, you don't get it. You haven't done the work. Maybe I get it. It's going to be complicated. And then you add, so now you create a company, you have governance and quarterly reporting and, the kinds of media exposure that the overexposure, say, that Saylor will get when Bitcoin's down a little bit. It's very, very, it's almost impossible. You have to think like, wow, it's almost impossible for a company to actually hodl Bitcoin in the environment, in the Overton window we live in. And the book I wrote was meant to sort of say, you know what, that is a bridge a little too far, I think, for institutions. So you have to crawl before you can walk. And so I was focused on the crawling. There's things you could. So the other thing I was looking at was, there were certain companies that had activist investors or board members that forced a vote, maybe like Microsoft forced a vote as to whether or not they would explore Bitcoin or hold Bitcoin. And I remember thinking at the time, my God, if they vote yes on this stuff, what a disaster this is going to be. Like, it's going to be chaos, right? What is Microsoft going to do?
Microsoft, you were saying that about when Microsoft?
Yes, because
I walked in there and he had 3 minutes to pitch to the board on Bitcoin?
Well, what are they going to do? Who's going to project manage Bitcoin projects?
At
Microsoft, and what are they actually going to do, to placate, say, some activist investor if they don't really understand what they're doing? It could be, I think it could be really damaging to jump in to Bitcoin if you don't at least know how to crawl. Okay. So I wanted to basically teach companies how to crawl. And that's really was the focus of the book. And so the first thing was like, explaining where it gets its value from, which is from individuals. Bitcoin is valuable because individuals view it as valuable. They see it. I think a lot of individuals view Bitcoin as more than a CAGR, and an institution will only ever see a CAGR in general. Okay, right? I think Saylor's an exception. From 2020 to 2024, he saw Bitcoin as the way to protect his savings from horrific debasement, like his life savings, right, and everything he built. So, that was fairly significant. I think Larry Fink views Bitcoin as the existential key to BlackRock surviving. So it's more than a CAGR to him, and it's more than fees from the ETF, in my opinion. So, like, assuming you have value, you place value in Bitcoin beyond the return, you're like now in the game with individuals who value it far beyond the return. But people, like, I'll just say for myself, the ability to flee the country, the ability to not have your savings stolen from you, just that whole, it's incredibly meaningful. And like, we're what, 50% drawdown right now off all-time high. If you're not leveraged, you're not really sweating it. You're not sweating it because you're still getting all those benefits.
So MSTR traded at like close to, I think it went over 400, 412, 415, I think was the peak, right? That was when they had about 300,000 Bitcoin. Now they're up to 700,000 Bitcoin, but the price has down, I think it's down 65% at this point, right?
Yeah.
Is Michael Saylor a genius or the most dangerous man in finance right now?
I think he's very, very talented man. And so he's clear. Okay. There's two Saylors. So what I will just say, this is a tale of two Saylors that we know in Bitcoin right now, because there's the Saylor that arrived in 2020 with a very relatable problem to solve.
Yeah.
And everybody who related to him and did what he did won outstandingly. Right? So like he was essentially the leader of this movement of protecting your savings and doing very well in the process, right? Doing wildly well. Now I think he's accomplished that goal and he's moved on to another goal, which I don't fully understand, right? I kind of get it. MicroStrategy is a certain type of institution, certain type of like capital structured institution that wants to provide products with Bitcoin exposure, right? So all I'm saying is he has a different goal now, and I think he's a good actor, and I think he does what he does very well. But I don't know that he's dangerous, because I think he's competent. Okay, right? I don't necessarily agree with the fear campaigns over people that accumulate too much Bitcoin or whatever they think is such a large percentage of Bitcoin. I mean, look, if that's true, these are birth defects from Satoshi, because there was never going to be there was just never going to be a way to limit who can accumulate the asset. So like, I think at some level, if you're in this game, you have to accept that there are people that are going to come in and accumulate a lot of Bitcoin. Galaxy Digital accumulated a lot of Bitcoin. Now they're, sort of in the rear view mirror, and they still have a lot, but like, they're sort of not relevant.
You're always going to have haters. Like, you're always going to have people that don't like what you're doing because it doesn't jive with with their philosophy. And I think that plays into actually one of the questions I wanted to ask is like, our Bitcoin buddy, Jamie Dimon, as I call him.
Yeah.
He's been after Bitcoin for a long time. And, when I was running a mining facility back in 2019, he was an investor in some of these mining facilities out there. Now, through obviously a third-party company, all that fun stuff. But when you look at, what JPMorgan, they're doing tokenization, they're, handle everything that's going on with MSTR there. Do you think that Jamie Dimon and JPMorgan is some type of conspiracy against Bitcoin, or what are your?
There's rumors that they were shorting MSTR specifically for a while.
I mean, I believe there are conspiracies at that level against Bitcoin, and I think sometimes they tell. I'm sure sometimes they tell.
I mean, it came out with the FDIC. We saw that.
Right? Yeah. So, like, I would say that probably there are conspiracies even above Jamie Dimon's pay grade against Bitcoin that every once in a while he is pulled in as useful to do his part on that. I don't know if those actions were part of that, but I wouldn't, it wouldn't shock me. I don't know that Jamie Dimon's ideology matters that much. I think he's a mercenary, and he's basically will do what he's told. And if he's told to attack Bitcoin, he'll do it. If he's told to support it, he'll do it. And it's hard to know how much they care about their institutions anymore. But I mean, what made big news, I want to say it was in January, was when JPMorgan created this very bespoke derivative. It was
the magic word though, derivative.
Yeah. Well, they created this very bespoke derivative for, I just assumed it was for a client because it just looked like a very unique scenario to protect against. And, a lot of people were reacting saying, oh my God, Jamie Dimon finally bent the knee. Look, he created a Bitcoin asset. He wants to accumulate, accumulate AUM under this Bitcoin asset class, and he bent the knee. And I didn't see it that way, although I did see it as notable. When I researched this thing, the two notable things were that one, somebody went to JPMorgan wanting a Bitcoin derivative, and they said yes. But the other really notable thing is that if you actually look at how they did it, they spent the entire year, they spent all of 2025 building the infrastructure to be able to do contracts like this. So they're up and running. They're up and running. They committed to having the ability. So clearly they don't want to lose customers. They're at least at the point where they're saying we're not going to let private wealth clients walk away because we can't do these things for them. And I'm guessing this was more prep for stablecoins and stablecoin infrastructure and things of that nature would be my guess. So I don't know if I didn't view it as bending the knee. I just kind of viewed it as there's the acceptance. It's almost getting pointless to continue to just resist this thing and hurt yourself over it.
Mm-hmm. No, 100%. I mean, I think it's one of those things. So I always look at this like, I know there's a lot of different camps, but some people are all about holding it outright. Some people are all about holding it synthetically. I think there's camps for both of these, and I think they both make great, points on each side. When you have a lot of the ETF supply squeeze, the current ETF supply squeeze, who's driving the price up? It seems like everybody's kind of walked out on it. I mean, according to Bitwise, Bitcoin ETFs absorb more than 3 million BTC in net flows in 2025 alone. I mean, miners themselves will only produce about 700,000. All of this together, you also have pension funds coming in, you have BlackRock coming in. I mean, you have demand here. And when you start looking at it from like a decade's perspective, what do these numbers tell you? Like, what are you thinking?
It tells me that the next phase of Bitcoin. It's like the first 15 years was individually driven, was retail driven. I strongly think because the first question you have to ask is how are we 50% down when all of those things that you mentioned happen? And so I think it's, there's a lot of talk about OGs selling their, finally selling sometimes for the first time. which makes sense.
But
right?
is it really them selling, or is it more like leverage short positions because you can borrow so cheap?
Probably both. But I don't know that you can borrow so cheap. So, we're in a time right now. This is the other interesting thing, which is the first 15 years of Bitcoin's life, we were at zero interest rates. In the last years, we've been, I don't like to call it high rates because I've been around a long time. Yeah. But it's the hardest money environment Bitcoin's ever lived in.
100%.
Right. So I don't even think we've begun. I think the only reason we're only 50% down is because it wasn't that leveraged and we didn't have a lot. The money was kind of hard in this period and we didn't have that wild, contagion effect of leveraging. But I do think that it's just like the ground is just not solid, right? So like the institutions are coming in, individuals are trying to figure out what to do. The ground is not very solid. And it takes time to figure it out. I think at some point in time, mostly when rates go down, the market's going to figure it out very fast. And I think we're going to see another moon. Again, what was the word you said? I wasn't some kind of like hopeless bull or something like that.
Yeah,
I am a bull though. I do believe that liquidity has been keeping. It's mainly been liquidity keeping.
Well, I mean,
going down.
People also need to stop thinking like crazy town, and start thinking more realistic. Like, if you go up, the pace at which we have, like we saw what happened in gold and silver, here not a couple weeks ago. How'd that turn out for everybody? Like buy silver, buy silver, buy silver. You're chasing the market. Anybody that's worked in any type of trading firm, you don't do that. Like that's just literal. It's dangerous.
It's bush league stuff. I mean, it's even though, I mean, I know the company I worked at was under a lot of pressure to invest in FTX and, good for them. They managed to resist it. But the perception of chasing is, lame and bad, and it doesn't look good on you, but everyone still does it. So
100%.
Right. And so the silver thing, it's like, what is even your investment thesis for silver at all? Right. Gold, I understand right now, especially right now. Like I get it. It makes sense, especially if you don't understand.
But it also goes to that generational thing, because think about it this way. Like if all people have known is invest in gold, invest in silver, invest in these. Why? Well, because you can hold it, because you can use it. But what about all of these derivative products that are out there that people invest in, all of these other instruments? Clearly the market is changing, and it's adapt or die kind of mentality.
For sure. And I think because of derivatives in a certain way, like mostly the ability to short, which is important,
Absolutely.
It's actually important, especially if you're, trying to hedge you're running a fund, you want to hedge the systemic risk, right?
Yeah.
So there'll be a lot of shorting. That might slow some things down. And I know, people might get upset about that, but this is how markets work. It's it's just part of discovery.
Yeah.
Everyone gets into Bitcoin, reads the Austrian economics books and says, yes, we need a hard money to discover, and we have to discover the pricing, but it takes a long time.
Yeah.
And you need free markets for that discovery. Derivatives actually make those markets freer because it just gives people more liquid options to take the positions they want. When I say derivatives, I don't mean the kind it's not the same
mortgage-backed security ones.
Well, it's not the same as fractional reserving, the kind of stuff that really gave gold ETF, the stuff that really kept that down. So there's nothing stopping anyone from buying actual Bitcoin. And that's the thing. I don't think that Bitcoin ETF goes the same way as the gold ETF because Bitcoin is auditable, and it's going to be very hard to get away with that. Call me naive. it's just I do think it's difficult. I know people are probably screaming like, look at what's going on right now, and a lot of people are convinced it's already happening.
With what? With gold?
No, with Bitcoin.
Oh, that
the ETF has fractionalized the supply, that has inflated the supply essentially, because that's just
I don't think
perception. I think that's a perception that's out there. And again, like I personally can't imagine BlackRock playing games like that now, this early. In fact, so I would say, if anything, BlackRock is actually reducing price manipulation. That's just my take.
Yeah,
because they have a higher mission here. Okay, like this is about survival for them. And if we had more time, I get into why I think they're even here to begin with, and what is it they're surviving. But like, they're not in it to make a couple extra bucks. They got plenty of money.
They're not making that much off of like the fees. Like at the end of the day,
yeah. This is about really power, and they got them. Their position in bonds is a big liability for them. Their clients' positions in bonds, right? So I took the clues I had were the asset allocation report, the full-throated heel turn. And it's like, okay, BlackRock clearly wants bonds gone. And then, well, okay, does Bitcoin make sense? Well, it's much easier to manage, right? So it's much easier to liquidity manage.
Yeah.
And if you go back to 2022, the British pension crisis, right? The gilt crisis that caused essentially the Bank of England to bail out the pension system.
Yeah,
it was all BlackRock's clients in long bonds that were being threatened to be liquidated. So when gilts spiked like 80 bips in a week, they were selling everything until the government called BlackRock up and said, "We got this. Please stop making it worse. Don't stop selling our bonds." And BlackRock I believe they don't want to get a call from a central bank again. So Bitcoin is countryless. There's no central bank that's going to call. They can do whatever. They can manage it however they want. And when you consider that there is now an ETF, it's fully hedgeable. So like that is the scenario BlackRock wants, right? If they could go back in time and snap their fingers, there would be no bonds, and it would be all Bitcoin, and they would manage it. They don't care if the price goes up or down.
Right.
This is how they want to manage their client's book, right? And then they're not going to be on the wrong end of a bailout.
Yeah, I mean, honestly, I think you have a lot of, I don't know. I want to be correct when I say this, but like when you look at a lot of products out there right now, I think what is happening is you have a society that's becoming more educated. And as they become more educated and more access to, materials and information, they're realizing that the bond market, and you just kind of touched on it briefly, is a problem. Pensions are a problem. And how many of these big funds are holding a significant amount of bonds? Almost every huge fund company is filled with pension.
Insurance companies, you 10x that.
Right. So
it's their whole portfolio. It's not, and that's like the reason we had these kind of like crappy derivative products, like you mentioned, like, mortgage backed, like as investments, is because insurance companies are a beast that needs to be fed. And that's like the 2008 crisis was largely a result of inventing derivatives to give yield to the insurance companies who are unlimited buyers of these things.
Yeah.
So feeding that beast is what made it at least the size that it was. So,
I mean, it's kind of scary though. I'll tell you that, because if you look at it, like I'm in Illinois, and if those pension funds, my mother's retired, she is on a pension. She was on a pension. I know a lot of people that are retired that are firefighters. And, if you look at it from a big picture, if you're a pension fund, yes, is it going to be less volatile investing in bonds right now? For now, yes. But like you have, I don't know. I just think that
I don't know. I mean, I don't even know if I could say that. I mean, I don't think I could work as an advisor and say what I'm about to say, right? But we don't know that rates won't spike 10%, in the next 5 years. Like we don't know that. No one in the world wants that to happen.
Right.
But we do know that inflation is very underpriced in yields, probably by that amount. And we don't know that there's not going to be an event where the bond market.
You think inflation's higher than what they're saying?
Yeah, I think over for a 30-year period.
Yeah,
I don't think it's that high right now as people think. Like today, yeah. But what we went through in the last 4 or 5 years was pretty significant. Bond market, the bond yields did not cover that. And
I just have no clue how anybody was like, "Oh my God, let's just go lower rates to zero and print money." And then, you do that. And I remember them asking, I think it was the Fed chair, what's his name?
Bernanke.
Yeah. Oh yeah, everything's fine. We're good. Like we're not worried about inflation. Dude, things are at 0% and houses are going up exponentially. How are you not worried about the elephant in the room?
Well, he was right not to worry about it, even though he's wrong, because it never burnt him, right? He's never once had to be, held accountable for that view. So for his objectives, it got him through whatever he needed to get through.
I just think lowering rates, I honestly don't think lowering rates is going to be like a catalyst here too. I don't think we're going to see. We could lower rates. That's fine. I don't think you're going to see a catalyst. I don't think that's going to be the catalyst that moves the market much higher. I think it's going to be an organic.
We don't know. I guess I think that if that's true, then I don't think there is a catalyst at the moment, right? We're just then in a recession, right? And there's going to be very little investment. Right, if that's true. So I'd say if that's true, then yeah, we're probably in a recession and things are going to be rough for a while, and there's no bullishness of anybody deploying capital anywhere, right? If it's not true, then
I don't think you're in as
liquidity will come in and start hitting things, and
I don't think you're in as an aggressive. I think an aggressive tech hungry. That's what was fueling, the growth of Bitcoin, in my opinion. The growth that a lot of the money that was coming in was following the NASDAQ lockstep. And now you have the NASDAQ. I mean, what's it down? I didn't even check. It's, it was down, I think 400 earlier. Change. I mean, Bitcoin's down. But it's not. They're kind of going hand in hand. So if it's a risk off on those products, you're not going to buy Bitcoin at this time because Bitcoin is viewed as a risk on asset currently. Is it really a risk on? I don't think so, but
unless you view Bitcoin as your flight to safety.
Right.
And so here's the dynamic that I think is interesting, and probably after writing the book, something happened in the world that, I had to sort of alter my worldview a little bit.
Yeah.
Because I think I was right about one thing and maybe wrong about another thing. So the flight to safety, at least I think the thing we were all right about, and you can kind of see it in this market, is that it never went to bonds. So that, to me, that's one of the most interesting things of the last 6 months, is that we didn't see the flight to safety in the bonds. We saw it into gold and silver in a certain way, right? That's where that capital went instead of going into bonds, if you look at it as a flight to safety. And it also didn't go to Bitcoin either.
Yeah.
So Bitcoin, I would say we got a stress test in 2025 and it showed not not ready for prime time, not ready to be used geopolitically in the way that gold is being used geopolitically right now. It's sort of just a progress report. And so gold got the capital, and gold's doing the dirty work, in my opinion, for Bitcoin. And people who are holding gold are being rewarded for that. And then, so that, to me, that's sort of like the progress report here. But I think the underlying thesis that it's still a flight. I view it as a flight to safety asset. Larry Fink does now too. And so in that respect, I think there's a reward for getting into Bitcoin now before the world sees it as that yet.
100%.
And then we'll see what happens the next time. We'll see what happens in the next instance. We don't know. I don't know when Bitcoin is ready to show up and be that. I don't know if it's next year or if it's in 10 years. Right.
I think we're also biased at our views because we're in the US. And I mean, I find this myself. I forget to think about what's going on in other parts of the world. You have Africa, South America, Mexico. You have all of these different geographic. I mean, hell, look at what's going on in Mexico. Look what went on yesterday. I mean, you take down a drug guy, and chaos kicks out.
Yeah.
And so I think the fact that it has no true boundary is a huge value add to it. But we're also taking on a monetary system that's been here for how long? And gold has been in use. I wouldn't even say that we're taking on gold. I think people need to kind of step back on that. And because I think they both can exist easily. It's just, I think you're going to see it's a generational thing. And as that generation continues to mature, the products are going to mature with it.
Yeah. I mean, look, gold is having its day right now. So obviously gold offers people in the world something right now, at least people with capital. Gold is offering something that Bitcoin's not.
Yep.
The proof is on the floor right now, right? I think at the limit, if I just look at Bitcoin and gold, I think that gold just fails at everything Bitcoin does. Like Bitcoin is just corrects. Gold has, to me, been a giant failure, right? And it's only now, because there's a geopolitical situation. Yeah. It's coming into play, right? But I don't know that any of these big gold bag holders. Well, first of all, I mean, it would have, who's holding actual gold, right? I mean, that's this
sovereign wealth,
right? So this comes down, so it comes down to, again, custody,
follow the money,
and all that. So you talk about a bias in the U.S., and that's true, but that's where the capital. That's where the capital is. So yeah, I think
when I say bias, I mean we have so many ways to move money in this country, and every way has its differences and pluses and minuses. But at the end of the day, we are super spoiled when it comes to how we move money, what method we want to do. If you go to other, I spent 3 years in Canada, and trying to, I could take a $20 bill to Canada, and people are like, hell, I want that $20 bill. You bring a $20 Canadian to the US, people are like, what is that? So we have that luxury. And now this is also where I think, Bitcoin and stablecoins are coming together. Is I don't really think stablecoins are an answer to a lot of things that we don't already have. It's what can be done behind the scenes. And the fact that you can back it with treasuries, which means you can back it with debt. Now you have a new way to pick up those debt markets that China and Japan and other countries haven't wanted to do.
Yep. I mean, particularly Japan, right? I mean, somebody now has to step up and do yield curve control. And so, yes,
that's a whole podcast in itself right there.
Yeah.
I mean if that unwinds,
that's what I mean by when I say I don't really know that bonds are going to hold value so much, because
that could be an economic crisis.
It's a reasonable scenario, right? That long at least long end yields just go crazy, right?
Yeah,
there's a reason. It's not like highly likely, but it's enough to that I would respect it. That there's no point in putting your hand on that stove, in my opinion. Bond. It's like, we talk about Bitcoin being a CAGR, but then many other things. Bonds don't offer anything else that make it worth your while to even deal with the possibility of a drawdown like that.
Yeah. Well, Brian, I know that Avi is dealing with a nice storm out there in the east, and so he looks like the weather got the best of his connectivity.
Yeah, it's too bad. I guess we got lucky. We got lucky here.
No, we did. I'm in Chicago, so I'm it's actually bright sun here, and it's a little chilly, but that being said, I mean, if people want to find you, where can they find you?
So on Twitter, at fundamentals21m.
Got it.
And then I would just say, check out my new project. Is called magicinternetmath.com.
Got it.
And we're teaching people the math to understand Bitcoin, to not be a second-class citizen on the Bitcoin protocol. And I'm innovating ways to teach that math, the math that has you understand the cryptography.
Yeah. No, absolutely. And, I have to give a shout out to all of our sponsors, Rhino, Arch, Crypto.com, Predix, Bitcoin News, who we, do this with. Honestly, Brian, it's been a pleasure to have you on, and look forward to bringing you back here
anytime
in the near future.
Anytime. Great talking to you.
You too. We will be back here shortly.
All right.